Real Money contributor Dan Dicker is here with some thoughts today on OPEC. Dan, poor OPEC.
Indeed, poor OPEC. There's been a lot of schadenfreude. That means...
Which means you are kind of feeling good about other people's misery.
That's correct. And we kind of seen a lot of pieces about OPEC's problems with a low oil price. And we've talked a lot about, there's been a lot of talk about Saudi Arabia in particular, because a lot of people feel that the entire malaise in the oil industry has been due to their overpumping on a market and keeping prices depressed. So there's been a lot of pieces, and it's true that the Saudis would start to run into a deficit if oil prices would remain low for about 5 years. So everybody's saying, well, if we're having a terrible time here in the United States and various other places in the oil sector, at least the Saudis won't get away unscathed. But the truth is, if oil stays this low for that long a period of time, the Saudis won't be the first to go broke. There's lots of other countries that are in
Let's put up a chart, actually, that might help explain this a little bit. All right, so we are looking at a big jump up there for Libya to start on the left.
Yeah, that's right. And the other line that you see in the center is one that shows how much oil is actually being produced. So what's more important in some ways is how far to the left you are in this chart and how high you are over there in terms of that line that you see. And you see some that really start to jump out at you as having tremendous problems if oil prices stay low, particularly Iran and particularly Russia. These are the two that will have the biggest problems and will go broke far quicker than the Saudis will with a low oil price. So when I look at, for example, some of the economic forecasts, and I mean totally global economic forecasts going forward for the next 5 years, we have to assume that oil won't stay this low for that long, because truly, with a number of countries that would run into a tremendous problem with a low oil price, we'd be looking at a real global depression should we remain around $45 for 5 years.
So maybe an explanation is in order here for why OPEC just can't cut production, why it doesn't work that way anymore.
Right, and they're trying to maintain a market share here and in fact regain control of a market they've kind of lost with the outsized production that's been going on in the United States, Canada, Mexico, and in other OPEC or non-OPEC states like Venezuela. So this is a long-term plan, but the important part, I think, and the takeaway from this is that we have to reconcile what are low oil prices now with what the global economy is capable of doing 3 or 4 years down the road. One of these doesn't make sense. They're irreconcilable. Either we're going to head towards a global depression or oil prices are going to recover over the next 3 or 4 years. I'm of the belief that it's the latter and not the former.
Dan Dicker, good to talk to you. Thanks.
Thanks, Rhonda.
I'm Rhonda Schaffler for TheStreet.